Um, and great to be back. Good to see everyone here. When I graduated, we the building was being built, so kind of fun to be back, see the building here, Huntsman Hall. Have a little nostalgia, but so a little background. I graduated about 8 years ago, 2015, and went straight into Goldman Sachs. So I've been there ever since. Um, I've had about 4 jobs at Goldman Sachs so far. So we'll get into that in a bit. But before that, I think maybe best to kind of lay the land in terms of understanding what asset management is, kind of getting your arms around that. So, and I also want to make this as discussion based as anyone would like. So feel free to ask questions. We can talk just between us the whole time to the extent you have questions, and we just have a Q&A. But maybe so to start it off, the first question is for me. Can anyone tell me how Goldman Sachs makes money? Yeah, right. Really good money farms. Yeah. Anyone brave enough? Yeah, fees. Yep. So fees are definitely part of it. Fees charged across a variety of businesses, right? Usually when you think Goldman Sachs, I would say the first thing that comes to mind is investment banking. Lots of people know of it, right? Kind of the #1 leader in M&A activity, continues to increase that gap and be the preeminent investment bank in the industry. For the first 100 years of its life, was pretty much just investment banking. So maybe about 50 years ago, did a fairly large acquisition of a trading house. So we've got investment banking, right? IPO activity, M&A, that's kind of the highest level pieces of investment banking that folks usually think about. So bringing securities to market is part of that banking division. The trading or global markets is what we called it, but sales and trading desk, trading those securities, right? A really large brokerage. And then about 25 years ago, we brought on, in a number of kind of fragmented acquisitions over time, the asset management business. So, I'm here to tell you what that is, but just at the onset, anyone kind of know already what asset management is at a high level? No? So asset management is on the other side of that. It's investing in the securities that have been brought to market. We would be clients of the trading house, right? So anyone familiar with the investment practicum class? Heard of it? So that still happens, right? There's the investment practicum class where student managed portfolios. Is Paul still the one running that? So yeah, that was actually where I first kind of was introduced to asset management. Really enjoyed what it was and kind of pursued a career in it. So portfolio management, right? The high level messaging here for asset management is taking investor money and trying to grow it, right? And that's through a portfolio, a full asset management business with equity capabilities, right? Public equity, fixed income, money markets, munis, private equity, hedge funds. It all kind of comes together as you create a holistic client experience in terms of putting together an investment portfolio. So that's what asset management is, right? It's being the investors in what is brought to market via investment banking and traded via a brokerage house. So back to the question of how Goldman Sachs makes money, it's diversified now, which is strategic, right? It's not just banking. Banking activity last year in kind of a down economy hit a rough patch. You need kind of that diversification. The sales and trading desk has elevated trading in a volatile market, helps sustain revenues to the business. Asset management tends to be fairly sticky with its client money. Clients are looking to invest over a very long period of time, right? Hopefully decades, where we continue to manage their money and grow it with market activity. And so that is where a fee is based, right? Management fees, performance-based fees that the client is paying to Goldman Sachs within asset management. Any questions, anything unclear there, just kind of at the high level of what asset management is? Yeah. Yeah, yep, that's a great question. So to kind of break down, right, we talked about broader areas of the business, now to just really go into asset and wealth management. And some of the opportunities that, if this is of interest to you, would be, opportunities for you to pursue. I would say there's basically two paths that you can go down when you come into an asset management or asset and wealth management business, which is what this segment of Goldman Sachs is called now. There's investing, which is more of the asset management side, and then there's sales, which is a little bit of client relationship management that occurs in the asset management side, but also a really big channel is the wealth management side. So the investing side, right? I have been in the public equity business my whole career. I'm on my fourth job, as I mentioned, in that business, but it's something that I've really enjoyed, wanted to be closer to the investing side of things. But we have our clients come to us via, I would say, three different channels. So institutions, so governments, corporations, endowments, foundations, it's kind of a broad institutional client base is one channel. Second channel is third-party distribution. So that can be through external wealth managers, Morgan Stanley, JP Morgan, Merrill, kind of being the big external wealth management platforms that come to us for some of our investment services. And then in-house, private wealth management, which there's a few notable alumni, Linda Danes, Brian Broadbent, that have come from Utah State and have been, multi-decade builders of a business in the wealth management side of things in Goldman Sachs. That would be another channel. And I would say, as far as wealth management, Goldman Sachs has been another preeminent business in the industry for wealth management. So yeah, it's related. It's just more of like a certain type of client that's being managed in terms of a client relationship. The advisor is also putting together a holistic portfolio for that client. And part of that would be coming to our equity business to make up that piece of the pie, right? Our various public equity optionality. But yeah, great question. Anyone else? Yeah. Yeah. So I was looking at, this, by the way, kudos being in this class, looking at all the different options that are available to you across the, the industry. Like I mentioned, I was part of Paul's investment practicum class, more like my junior, senior year. And it was just a different experience. It was us coming to class, all the, learning and initiative was put on us, right? Paul was there to kind of observe and help how he could, but we had portfolio managers that were leading, putting together a strategy. I was an equity analyst on the team. I was looking at, given today's market backdrop, where should we be investing in the equity landscape? There were fixed income analysts, traders, and it just all seemed so interesting to be there and see it happening live and to be a part of it. And it was something that, again, just was really interesting to me, and I wanted to pursue it. Just, felt felt a little bit more natural, felt connected to the economic degree that I had initially pursued. So much of how we invest relates to what is the economic market backdrop. So yeah, that was kind of what attracted me, and kind of how I got my feet wet and decided to pursue a career in it beyond just the academic experience. So yeah, I was international business and economics with a minor in finance. And so yeah, maybe a little bit about my career path. I started in the equity business, have been there the whole time, started in a proposal writing position. So the way that works is, I mentioned 3 different sales channels, right? Institutional clients, external kind of retail managers, and then in-house wealth management. Proposal writing is mostly related to that first channel, institutional sales. When a government or a corporation wants to change an investment, add an investment to their company's or institution's portfolio, they'll release a request for proposal. If it's a public entity, it's usually publicly available for you to bid on it. So that was my first job, taking those, looking at the request, all the questions they were asking, and filling that out, explaining to them in written format what we had to offer. And specifically, I was focused on emerging markets and developed international markets. And so that's where a little bit of the international business degree, kind of came in handy, kind of understood a little bit of the international aspect of our business. Yeah, so that related to the degree. That was my first job. My second job was a product analyst. So that involved kind of going a step further, being a little bit more quantitative, doing portfolio analysis, looking at how our portfolios are performing over periods of time, providing commentary on which stocks are working well, which aren't, maybe which sectors of the market have been performing well, which haven't, and how we've been able to be overweight or underweight different areas of the market in order to help us perform well or not versus a benchmark. And so that was the second job, right? Being a little bit more analytical, looking at the portfolio attribution, doing the analysis, and then on the back of that, also helping with putting together pitch books and marketing materials that we brought to clients. So I mentioned RFPs. That's a pretty straightforward written process. Beyond an RFP, our client engagement, both for prospecting and for maintaining business, involves a lot of client engagement. And so having materials, having a pitch book, having analysis that can be custom, tailored to a client is really helpful, right? It's kind of part of the sales initiative within the business. So that was my second job. It naturally led into my third job as I continued to grow, gain experience, and have confidence in my ability to engage with clients. Third job was being a client portfolio manager. So within our business, we have, so I kind of broke down the different asset classes, right? Fixed income, public equities, some of our alternatives with private equity hedge funds. Within the public equity business, I'm in fundamental equity, which means actively managed. And within that, we have US large cap portfolios, we have US mid cap, small cap, we have non-US and emerging, which was where I was focused. We have real estate, infrastructure, thematic, basically based on sector investing with healthcare, technology. We have an ESG business, can go on, but different areas of the business that exist within our fundamental equity platform. Again, I was focused on emerging markets and international. My job was to sit next to the portfolio manager, who is taking all the research being done by his or her research analysts, putting together a portfolio and trying to beat a benchmark, right? In this case, usually in emerging markets portfolio being the MSCI Emerging Markets Index, right? Because you can go to market, you can buy in your Fidelity account or your Robinhood or whatever, you can go and buy ETFs that track like the MSCI EM index, emerging market index, to get exposure, right? Our job as active managers is to provide sustained outperformance of that benchmark over time. And so that's the portfolio manager's job, is to put together a portfolio that can beat that benchmark. The client portfolio manager's job, which again was my job, sit next to them, be part of the research process, know what's going on, but then bring that to the clients. And so my job was asset raising, right? Grow and maintain the assets that we then manage for clients. And now, just within the last year, have moved on to my fourth job, which is to maintain, or I should say, engage the wealth management channel. So specifically that channel, it's broadened out to now be our whole fundamental equity platform. So not just emerging and international, now it's everything I mentioned before: US, large, small, real estate, infrastructure, ESG, thematic. It's pretty broad, but the job is to be a resource to our wealth management teams, engage them, let them know which areas of our business are performing well, what we would think they should look at and include in their client portfolios. And the way I lead that strategy for our business is first and foremost by engaging those clients. So that involves a fair amount of travel just to be at any one of our 15 regional wealth management offices. So New York being the largest. We have a whole slew of East Coast, from Boston down to Miami offices, Houston, Dallas, Chicago, kind of in the mid section of the country, and then West Coast offices across Seattle, San Francisco, and LA. So that's my job: be in front of those folks, engage their clients, engage the advisors themselves, let them know what areas of our business they should be investing in. Kind of secondary to that is broad initiatives with this channel. So, putting together calls on a regular basis, usually monthly, where we target one specific area of our business, bring in the portfolio manager, have a deep dive on what does their market look like, how are their portfolios performing. On top of that, a variety of other kind of marketing emails and calls and things that we're putting together for clients. Anyway, so that's my experience within asset management and within fundamental equity. Any thoughts or questions on that? Yeah.
What is something that would set one up for planning process? And then
Yeah.
Another question is, what's something that set you apart? Just kind of that click moment you had.
Yeah. Great question. So I would say, so personally, the way I got on someone's radar was through that investment practicum class. It's real experience, right? We were part of a portfolio managing real money. We didn't do well, but it was still a learning experience. It was 2014, I think, when oil was at like an all-time high, and me as an energy or as an equity analyst, thought we should put our money in energy, and it proceeded to fall the whole rest of the year. So that was anyway. But so being able to speak to that, kind of the learning experience around why was energy at that level, why did it decrease, what was happening in the broader market as a whole. Being able to speak to that in an interview was helpful, right? Beyond just kind of textbook learning, it was real world experience. So I would say that's something, right? Like it doesn't have to be the investment practicum class, it can be internships. And I would say start looking for them as you approach like your sophomore year, even, right? It's getting increasingly competitive. I feel like every single year we start hiring like a month earlier than we did before. Like we're already starting to look at 2024 summer internships. And it's barely March 2023. So anyway, so be looking at it, you know, as sophomores start applying, and be looking for, you know, any way you can kind of break in. It doesn't have to be a formal internship either. It can be job shadowing, you know, whether it's, I know there are a few advisor offices, so wealth management that you brought up, you know, you can get involved with that. You know, anyway, so just any way that you can kind of get involved in investment, in wealth management, different areas of the industry like that early on will set you apart.
Did you, what did you
Yeah, so I did an economic development internship through the school, actually. So it wasn't entirely related, but it was, you know, something. It involved looking at land usage in the Ogden Valley, and so it was tied to real estate and different real estate contracts that exist and how you kind of build out and preserve green space in an area that a lot of its real estate is kind of valued based on that environment. So that was something that, you know, was at least relevant to the real estate area of our business, tied to, you know, maybe not investing directly, but still property types and values that are relevant within a broader equity portfolio. So, and then yeah, the investment practicum, not an internship, but real world experience. Um, you know, I think as far as a resume goes, I think both were probably something interesting, something that caught attention. In terms of the interview, I'd say the investment practicum was a bit more relevant. So, yeah. But yeah, good question. Yeah. Yeah. Yep. So you'll be a lot more targeted in asset management is something I'd say, right? Like, so if you're going down the investment side, you'll end up either being like me, part of public equity investing. And then within that, right, for quite a while, for like 7 years of my career, I was pretty narrowly focused within that on emerging markets and international developed markets. And if you go into research, you'll be even more narrowly, right? Like our EM team maybe is a little different than others in the industry, but we have a team in Hong Kong, in Mumbai, in Sao Paulo, and in New York that are regional experts in addition to being sector experts. So you'd have like an analyst that's focused on like Chinese utilities, right? Like someone who's so narrowly focused can go really deep and provide some really interesting research, have an opinion on where to put your money within that sector as we're building up a broader emerging market equity portfolio. And so yeah, it's a lot more targeted, and you know, with the research aspect of it, it's also a little bit different in that you'll be valuing companies, right? Engaging their company management. The way we kind of determine the quality of an investment is in addition to having like a DCF model where you're valuing a company, engaging with the management to see if we think that they're transparent, if they're competent, engage them on different topics in terms of how they're approaching issues in their industry with whatever the market backdrop might be. We engage them on ESG topics, and all of this kind of builds a picture of a company that we're going to invest in. Right, that's a pretty different job to someone who's a wealth manager going out and maintaining a book of business where they're investing across, there's a pie that makes up the investment where there are a ton of different slices of that pie in public equity alone, but their whole pie will be fixed income, public equity, private investments, etc. So they're a lot more involved in kind of holistically looking at a client portfolio and engaging clients directly. But yeah, good question. Yeah. Yeah, it's a good question. So I actually really enjoy what I'm doing right now. So that's nice. I would say early on, I kind of had to get through some jobs and some periods of time where I didn't love what I was doing necessarily. But I always kind of knew that this opportunity was on the horizon and something to build towards. And so that was motivation to get through maybe the first couple years where you have longer hours, where you're doing work that you feel, is additive to the business, but just, can kind of be a slog sometimes. You know, at this point, leading a sales channel, setting the strategy, engaging people directly, engaging with clients, it's something that I've wanted to do for a long time. And so to be here, I kind of hope to be successful in this role, be able to continue to grow the wealth management channel's share of our pie, right? Like right now, we've already seen some growth, which is great. It's grown to be almost a third of our client types. So, it was institutional, TPD, and PWM. Up until a couple years ago, it really was mostly external advisors and then some institutional, and PWM was the smallest piece of the pie. Now it's roughly in line with institutional, and continues to take wallet share, is how I would say, from other areas of the business. Not like we're competing with other channels, just that we're growing and being successful with that client type. So I like being able to set the strategy, engage folks, and see the results come in. So yeah, I'll continue to do this for a while. I don't honestly know what comes next. I've always had a little bit of an interest in maybe trying my hand at the research side of things. So being, in the portfolio manager side instead of the client portfolio manager side. Maybe that's a couple years down the road if it becomes something I really want to pivot and try something different with. But for now, I really like what I'm doing. Yeah, I should say within Goldman Sachs, mobility is something that they pride themselves on. So especially in the early days of a career, you come in and maybe you just got your foot in the door with whatever it is, but it's just not exactly where you see your career long term. Maybe you got into, sales and trading desk and you actually really want to be an investment banker. There are options for that, right? And location wise too, plenty of folks that move from Salt Lake to other offices, folks that move from other offices to Salt Lake. So mobility is something that Goldman Sachs prides itself on and is definitely, an option. And candidly, when I was in your shoes, I didn't take a class like this. I did go on career exploration trips and thought maybe I had some grasp of different opportunities in the industry. But once you're in it, you really start to have your eyes open to all the different jobs that are being done across the industry, right? And so you may think that you got into a spot where you wanted to be, and then realize a couple years down the road as you learn more that you want to be somewhere else, and that's totally fine. We're encouraging of that.
8 years, 4 jobs, about 2 years per, or did you?
Yeah,
give me a time
roughly. Yeah. So about 2.5 years in the first job. The thing about it is I've been in the same public equity business for the whole time, so it was less of a clean break between jobs. There were, in every job, times where I was still doing my old job, training someone else who was coming up behind me to do that job while doing the next job. So that might be a little bit unique, especially compared with someone who switches divisions within the business, or actually formally changes jobs across different companies.
Pretty typical for Goldman in terms of progression.
Yeah.
The other people in other areas and other departments, is it a couple of years and then moving up? So if you're not moving after a couple of years, you can start to be worried about it, or what are your thoughts?
Maybe at a more junior level, I would say that yes, you kind of there maybe are the few exceptions where someone really likes proposal writing, and so they continue to do that, even though that was my first job and you can get into it right out of college. Usually they'll end up leading a team that's doing that. Part of Goldman's culture is like, as you continue to do the job and do it well, you end up leading teams. So that might be an element of it, but if that's what someone's passionate about and it just makes sense and they're building a puzzle piece by piece and really enjoy that process, there's scope to communicate that. One thing I would say is, my wife went to USU too, was up here a couple years back doing a similar kind of career panel, and someone had said something like, if you don't want to do something in your job, if there's something that doesn't sound appealing, just don't do it, and eventually they won't come to you to do it, and you can move on and focus on what you want to focus on. That's an interesting take. I would say probably a better approach, in my opinion, is to be someone that takes that on, but communicate as you're doing it, right? Be someone who's a team player, who's a contributor, who can show that they perform well and are doing really good at what they're doing. Maybe they're even taking on some of those things, extracurriculars that they maybe don't want to do forever. But as you're communicating with your manager, and this is broad advice, right? Not even just finance, but as you're doing that and as you're communicating broadly with people, you'll be able to move on to what you want, right? Identify what you want, do really well at what you're doing right now, and then have that person, whether it's a manager, whether it's a mentor, have someone that you can communicate with that can advocate for you, with other senior leaders in the business that say, look at this person, they're doing a really good job at what they're doing right now. They've been communicating with you that, this other thing is something they would really like to do. As soon as an opportunity opens up there, we really ought to move them there. In a culture that a good culture will enable you to do that, right? Because they want to be an ecosystem where people enjoy coming to work, they're passionate about what they're doing, and it's valuable for the business to have people doing that, to have lower attrition, right? It's the natural thing. So, yeah. 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 I would say that as a firm, my experience has been that it is very much a people-oriented business, very much a team-oriented business. You know, when I first came in, I had notions that I was joining a firm where there were really competitive people and I was going to end up competing with the person sitting next to me. That concept was not true. I got in it and it experienced much more of a team environment where we're all contributing as part of a team to compete against maybe external firms, right? To try and be the best at what we're doing as a team. And the extent to which even senior partners of the firm are willing to take a half hour, connect with you, engage with you, know who you are as a person, and try and help you with whatever you're doing in the firm, right? Like proposal writing. I would engage with, you know, partners of the firm who are helping manage that business to talk about, you know, specific answers we were providing or analysis we were providing in a proposal. I don't know if that's, again, I haven't been in a lot of other, I've only been in Goldman Sachs. But I kind of think that might be unique, the degree to which there's a little bit of a flat environment where folks engage with each other, help each other out, regardless of seniority. Yeah. 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 Yep. I was expecting this question to come up, so winner. Yeah, so it's one of those times that will probably be, you know, a historic moment. So something that is interesting to see. You know, you think of like, and I'm certainly not here to say that it's anywhere near like the drama that you saw in '08 or in 2001 or, you know, other periods of market crisis. But it is an interesting event. And so I'll say two things. One is kind of the more optimistic view, and one is maybe a little bit more of the pessimistic view. From an optimistic standpoint, and maybe you've already seen this as you've read and paid attention, Silicon Valley Bank is a little bit different, you know, in terms of its business operations, mostly meaning its investor base, right? It's its deposit business was very narrowly focused on a certain subset of client types. Sorry. Those being in the technology and healthcare space, kind of your more growth-oriented businesses. I don't know if any of you are familiar with Kathy Wood and ARC. Maybe I shouldn't say any, redact that. Anyway, but kind of investing in the most innovative areas of the market, right? Like the problem with that is these end up being the least profitable, meaning the business types are new, they're startups, they're not profitable yet, they're small caps. And as they're maybe prior to this increasing rate environment, there was a lot of easy money policy, a lot of access to capital. Silicon Valley Bank operating in that space with their lending and their deposit business mostly being focused on this space. So as you increase interest rates, you start to put a lot of pressure, especially on non-profitable sector businesses within those sectors that are already trading at really high multiples. And so you start to see less activity, right? Like their liquidity dries up. Their loan to deposit ratio was out of whack. And so, yeah, it starts to kind of hit, you know, a Silicon Valley Bank. It's different than a lot of other banks, right? A lot of other banks will have a healthy deposit to loan ratio. They'll have a very diversified client base, right? Outside of just these startup and Silicon Valley type businesses and clientele, you know, meaning like wealthy individuals who are coming to them for their lending and deposits. And so that's the optimistic view, is that, and one that I'm kind of partial to, especially is in the more immediate term, right? We aren't seeing a lot of contagion and it's being controlled by the Fed at the moment. So yeah, not a lot of spillover. The bank is a little bit unique versus a lot of other regional banks. So the more pessimistic view would be, and this is what the Fed is trying to control, is if there were mass run on the banks, right? Think, Great Depression, right? Like the reason that occurred is that everyone was in a panic. Everyone came to the banks, wanted their money back, couldn't get it. A lot has changed since then in terms of FDIC insurance and in terms of capital controls and capital requirements following the '08 crisis. But still, like a bank can be healthy, but if there's mass panic, then the banking system is at risk, and broadly, right? Not just a Silicon Valley bank. So, just to kind of bring you back out of that kind of scary scenario, the Fed is at the moment, right, putting together programs where deposits are fully being folks who are coming for their deposits will be fully reimbursed. They're made whole, and they're putting together a program that's even more broadly, available, going beyond the 250,000 in deposits that's FDIC insured. So I think there's kind of control in place. We aren't seeing. I think after those things went into effect, we're seeing maybe less panic in the market, and I think we won't see as much spillover effect. I'm hopeful anyway. So, yeah. Yeah.
What does your day-to-day look like, especially your first few years? What was that? I understand that it's a lot of hours. It's a lot of work. What does your day-to-day?
So early days, is being in office, probably and I won't say this is common, but the rough weeks were like maybe 80 hours a week. Probably on average, it was more like 60 something. And it was coming in, we had kind of operations folks who would gather the proposals and send them our way. And then my job was maybe, educating myself, being part of the research discussions, engaging the portfolio managers, knowing what's going on so I can speak to it, in a proposal as I'm writing it. And then just writing the proposal itself. So different clients would have different questions or interests in a proposal request that they're sending. Some want to go much more deep on like the culture, right? Like talk to me about the culture of Goldman Sachs as a whole. And so that's something that I needed to be able to write out, explain in a written document proposal. Some wanted much more quantitative analysis, like give me all the attribution over the last 10 years for this portfolio. Are there stress tests that you've done? Can you provide that data and analysis? So I'd aggregate that, sometimes perform that analysis, put it into the proposal as well. So that's kind of the earlier stages of the career. That was the first job. The second job would be more of coming in, helping as we have more proactive client engagement, build out a pitch book that's targeted at a specific client opportunity, helping build out other marketing materials, doing the portfolio analysis that a proposal writer might take from you to include in the proposal, and then still being part of that portfolio management team, right? Listening in on the research calls, engaging that whole team, kind of knowing what's going on at a more quantitative aspect. So what's different now is that it's a lot more of like my job now is basically every other week I'm on the road in any one of our 15 wealth management offices, engaging with the advisors and their teams to talk about. So now I'm using those pitch books and that marketing material, right? That in prior days I would have been building. Now I'm using that to engage with with teams and either pitch on a product or do a review with an existing client, stuff like that. Yeah. And I think you had a question too. Yeah. 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 Right. So like the contagion that I mentioned is something that I think everyone was a little worried about. Maybe your question's more like, do we have exposure to that in-house, like in our portfolios? And just, I mean, it's public information in terms of like, you look up the holdings reports. No, we don't, right? Like we did actually hold the bank so we held the stock within some of our, I think, mid-cap value funds a little over a year ago. We sold out as kind of the interest rate environment changed, as interest rates were increasing. I think that's kind of the benefit of having an active manager with research analysts that are very focused in on something as specific as that. They can kind of foresee some of the issues that might occur. I'm not saying they predicted this, but the environment for which a Silicon Valley bank is providing financial services to these types of businesses that are having a tough time because they're having more significant headwinds than a lot of other businesses in a rising rate environment. That's where we decided to exit, right? And so we exited. We're coming up on a year ago. Not a position that we held, so not directly impacting our portfolios. But maybe back to the other question, something that we're still definitely monitoring and something that we're thinking about, and as we kind of look at regional banks as a whole beyond just Silicon Valley Bank. So, yeah. Yeah, so it's more like we have 100+ investor team that's providing insight, right? Like that 100+ investor team is, as I mentioned before, much more regional and sector focused, whereas my job is pretty broad and to lead a strategy for engaging with a certain client type. And so my expertise has to be quite a bit more broad, but that means that it's less deep, right? So I'm in the case that a client has something very specific that they're wanting to talk about, focus in on, then I can loop in, the specific research analyst or maybe the portfolio manager that oversees that research to engage with that client in partnership with me, right? So that's where, yeah, I would say I'm leaning on a pretty large team that has some very specific specialist approaches. Yeah, so and that's the way the portfolio managers operate too, right? Is a portfolio manager usually has some background in, as a research analyst, has maybe grown into being a portfolio manager. Now they have a team of however many research analysts that are sector specific and regional focus, bringing them ideas. The portfolio manager then takes those ideas and makes the final decision as they build a holistic portfolio. Then my job is to communicate the value of whatever portfolio we have available to advisors and their end clients. Yeah. Cool. Yeah.
Other stuff, I mean, that sounds Excel, PowerPoint. I mean,
Yeah.
Other software programs, what else are you doing?
Yeah. Yeah. So a lot of Office that's used, right? Like, so the pitch books would be built in PowerPoint. The portfolio analysis maybe the output and some of the work is being done in Excel. A lot of that then has systems that are contributing to it. So FactSet and Bloomberg being probably the two most prominent. So I know Bloomberg terminals here in the building that you probably use. If you're familiar with that, I think back to one of the questions earlier, like that's something that sets you apart, right? Being able to show that you have maybe certifications or something with the Bloomberg terminal. Is FactSet something that you guys use here? Or yeah.
We have a couple other ones though. There's other data aggregators that we use.
Yeah.
So there's some of that.
Yeah.
But not necessarily the same type of certification as you get with a Bloomberg or
Yeah. Right. Yeah, Bloomberg is kind of special that way, but yeah. So other systems, right, are Bloomberg and FactSet are big ones that we use a lot in our business, and then some internal stuff too. So like our research database is called Fluent, and investment dashboard. They're just areas where instead of building like a sector comp sheet in Excel or like doing your DCF in Excel, you can build it into a more a software that's proprietary that kind of helps you do that, and then also looks at competitive, you know, the competitive space within a sector comp sheet. Yeah. And yeah. 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 No, that's a good question. MBA. So it's kind of the classic MBA or CFA. I would say within our business, especially if your intention is to go even more into the investor side and be a research analyst or a portfolio manager, CFA is probably more valuable. But MBA provides some similar, you know, some similar skill sets and learning opportunities. So that's something that, you know, a fair amount of our research analysts have also gotten MBAs, in addition to or instead of a CFA. There is the sales side of it and there is the management side of it where an MBA might be more valuable. So, you know, if your job is more to be a client relationship manager, maintain some relationships with institutions, or to lead a business, right, as kind of someone who oversees broad swaths of, like, if you're the CIO of a public investment arm of the firm, like, yeah, an MBA probably is something that's a little bit more relevant than a CFA. So, but yeah, they're both certainly present within the business. And something that, yeah, I guess if the question was more specific to me, both have been things I've thought about. Haven't pursued either of them yet, but yeah. So I guess, you know, fair amount of folks who don't have either that have also been able to, I think first and foremost, the quality of your work and your performance within the organization kind of speaks for itself and will open doors and provide opportunities too. So that's kind of first and foremost. Yeah. No, they usually come in as an associate, especially if they're an MBA, or they at least are fast tracked a little bit more, right? So, and I should say, my jobs, right, as like proposal writer, product analyst, client portfolio manager, and now head of engagement with our wealth management channel. They kind of loosely coincide with some of the, because you brought up like the other formal positions that are more publicly viewable, like analyst, associate, vice president. As I kind of moved into the product analyst role, it was a little bit more associate. I had been doing it as a senior analyst maybe, and then moved, that was a job that I could get kind of the associate level promotion as part of that. As a more senior associate, I started doing more client meetings, being a client portfolio manager, got the vice president promotion as part of that. And then since being a vice president, as I've just continued to establish myself, have moved on to the head of engagement with wealth management. So it's kind of a little weird, but you do have like the formal track, and you have, kind of job positions that are just, something you pursue on your own. And the timeline too is usually like 3 years as an analyst, 2 years as an associate, and then you make vice president, and then the timeline becomes much less formal. It becomes much more of a, what kind of commercial impact are you having on the business, and are you someone who can be a leader? That's how you continue to grow into more of like the managing director and partner levels of the firm. Yeah.
Best part,
Question?
that's the worst part of your current job?
Yeah, kind of. So I would say, the travel aspect is kind of fun. Get to be in any one of the 15, city centers that we have offices in. It can also be kind of, tough to be away from family. So trying to find that balance, and I am kind of lucky that I have a little bit of control there, as opposed to, if a client meeting is happening, then I have a little less control over timing there. But otherwise, I kind of set my own schedule in terms of rotation and being able to be in whatever office and engaging different teams. So that's nice. And yeah, so the travel is kind of nice. And I just have always had kind of a passion for not only the subject matter expertise, but being able to communicate it and engage with a human being, right? Instead of maybe being the one behind the spreadsheet. So that's something that is a benefit. And then, I would say the tough side of it is being the one that has to, and it's, it's part of the job to be very transparent and be someone who isn't trying to just paint a overly confident, colorful picture of how great everything is. There are times when we underperform, right? There are times when we chose a stock and it went the wrong way, and that's not always the fun conversation to have with a client or with an advisor, but being able to approach it, speak to it, what our thesis was, how that may have changed, what's the go forward look, and being able to just kind of have the cool head and talk about it is a good skill to have, but not always the funnest part of the job. Much more fun to talk about, when we're winning.
Virtual? I mean, are you doing any of your job virtual now?
Yeah.
Remote?
It's a lot more in person now than it was. So, everybody kind of was virtual for 2020, well into 2021. I'd say midway through 2021, we started coming back in person. I do think that to some degree, we will never see pre-pandemic levels of, in person versus virtual. The fact that everyone's kind of gotten comfortable with Zoom calls, some element of virtual engagement is a benefit. It's, something that is nice, and I think it's a convenience that will always be present. And so to the extent, we're providing more work-life balance opportunities to work from home when you need to, it's much more prevalent now than it was, and I think that will continue on. But yeah, we are back to in person, and I think there is certainly a lot of value to being in front of a client and being able to engage them in person. So nice that we are, for the most part, pretty much back in person rather than virtual.
We're about out of time. I assume they can reach out to you if they have questions.
Yeah,
Additional
yeah, absolutely.
contact, I'll
Yeah.
post your information, or they can find you on LinkedIn, but I'll post on the Canvas page.